Hello and welcome to Tech Talk, where you'll hear the latest in technology and investment trends directly from the trendsetters. I'm your host, Fritz Spencer, member of EisnerAmper's Technology and Life Sciences practice, and with me today is Vice President of BDev Ventures, Keshia Theobald-van Gent, to discuss the strategic role of venture capital in shaping the future of startups. We'll explore strategic investment approaches, emerging technologies, and startup success. Before we dive in, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Thank you so much for joining me, Keshia. It's an honor to have you here.
Thank you so much for having me. I'm really, really excited. I love what you guys are doing.
Thank you so much. To kick things off, could you briefly introduce yourself and BDev Ventures to our listeners?
So I'm Keshia. I head up BDev Ventures, and I got into venture capital, actually founded a company many, many years ago. Worked at GSV Labs for quite a while, and then I ended up running an accelerator here in Silicon Valley, and I had a team in New York as well. I joined BDev about 2.5, almost 3 years ago. And at BDev Ventures, we are the non-strategic investment arm of BuyerSdev. BuyerSdev is a large LATAM tech unicorn, very impressive company. The founder is Nacho DeMarco, and Fergalano is the CIO over there. And together, we work with them to launch BDev Ventures about 3 years ago. BDev is minority investor. So we don't lead rounds. We don't generally take board seats either. Our largest check to date is $3 million, although we're greenlit to go as high as 5 to 7 in some of those later rounds. As a new fund, we're still, the majority of our portfolio is still pretty early. We've been actively investing for about 3.5 years, and we have 53 investments to date. So we're very, very active. In addition to capital, we provide access to a lead gen platform. So this is essentially our response to a platforms team. I think all of us recognized, and certainly why I joined the team, being able to add value to founders in a systematic way was really important to all of us. And there's a lot of investors in the world that add a ton of value, but sometimes that can be hard if you have a lot of portfolio companies. So for us, being able to give access to that platform and other go-to-market tools that we've developed at the parent company has been a really big value add to our portfolio. And happy to answer lots more questions about that.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
Yeah, we'll dive right in. You touched on it a little bit about your basically at what I would call your thesis or investment strategy. And so I'd love for you to share more about that. You kind of touched on, we don't want to be one of the mini chefs in the kitchen, but can you share the core thesis around BDev and the strategy that you guys have built your firm around?
Yes. So just like startups, we're looking to differentiate ourselves as well. Right? We want to get into the best deals. And to do that, we feel like we need to bring something special to the table. Not that the team isn't special in and of themselves, of course, but our basic investment thesis is that we invest in startups where we can add value, where we can move the needle, and where we can essentially help them be a part of their go-to-market strategy and help them move the needle, toward revenue. I think for us, we recognize really early on, and this is really Nacho DeMarco's brainchild. He recognized really on as a founder himself, and I was a founder, what do they need? Revenue. This is how we can have the biggest, the outsized impact that we want to bring. And so we have this lead gen platform. We're investors, right? So this is not a platform. It's not for sale. It is, I don't think anyone would be offended with me saying this. It is very, very effective. We make up somewhere between 6 and 65% of all new revenue for our portfolio companies that are active on the platform. So it's highly effective. It's not pretty. It's not a beautiful SaaS product. We don't sell it. It's very much so an internal tool that we're using. But that's our basic thesis, is how can we invest in companies where we can help them grow? And as a part of diligence, We run a pilot. So we're doing traditional diligence like any other investor, right? We're still investing cash. We're very traditional in that sense. But we also run this pilot. So it helps us understand before we ever invest in a company, how is the market responding to their outbound messaging? Are they getting a lot of traction? What does that look like? And can we help them?
It's interesting. Yeah, I definitely think we'll circle back to moving the needle and what that needle means to you guys. Sounds like revenue gen for sure. But let's talk now about the tech you're investing in. It sounds like you built your own tech. You're not saying it's flashy or anything, but you're building your own tech to help these portcos. What's the portcos themselves? What's some of the tech that they're building that has gotten you interested?
That's a fabulous question. And we're something of a generalist fund. So we're investing in B2B software, kind of late seed, if you will, through Series B. But for us, that typically means we're looking for companies. They may not have product market fit yet. They may not be at that, 1 million ARR mark. That's okay. But they're sales ready. They have revenue. They have identified an ICP or a persona that they're going after. Because again, that's where we're adding value. So we can't really work with companies before that stage. And then our largest check to date was a $3 million check into a Series B round. So we are willing to go, and we'll kind of stay in the game as long as we can. That was a follow-on check as well. So we're interested in supporting the companies. We really do view it as a partnership. So we're supporting them as long as we can. As far as kind of what industries and verticals, we are a generalist fund. That being said, we're not investing in anything that's heavily regulated. So it's such a different investment model. And I'm sure you know this as well as I do. Investing in a biotech, medtech, health tech, typically when you're looking at FDA regulations, the majority of the investment happens before that product ever goes to market. And that's just not a fit with our thesis.
Got it. Yeah, those deep tech, investments are really, they require specialists, they require specialized knowledge, specialized teams. So it's definitely, if you're a generalist, staying away from those makes a lot of sense. Now you mentioned you cut that $3 million check. I'm curious, what problem are you solving with that $3 million check, and what problem is that portfolio company going to solve with that $3 million check?
That is a good question. I would actually say, interestingly enough, for the majority, certainly when we're writing checks into companies, one of the first questions we're asking is, how are you going to use this money? How is this going to help you grow? And there's a few standard answers, right? Like product development, hiring the team out. I would say because of the value that we bring, a lot of the companies that we invest in end up hiring sales teams. Or putting more into that bucket, probably than some other funds. And because of the stage that we're investing. So we're not, product readiness is a big part of our investment criteria. So I would say probably less on the development side and much more on building the team, growing and really putting emphasis on that go-to-market function.
So this first series are to really get them to build that MVP out, get their product into a viable market. And then when you come into the next series, you're really pushing that sales growth, that expertise that you guys have into identifying open markets and where you can push.
That's exactly right. Yeah. Although I will also say the majority of companies that we talk to, we probably talk to them at that first round. So for the majority of companies that we have invested in, we've probably told them no before we tell them yes. So we are like a lot of investors, right? We're getting in touch with them way early, way before it would be the right time. We really love the opportunity to build that relationship. So we were joking before we got on today that we all say yes a little bit too much. I probably talk to way more founders that are outside of our thesis, but could one day be a fit. So if anybody's listening and thinking, oh, BDev sounds interesting, don't hesitate to reach out because you're too early.
I love that point. And I see that as a very recurring theme with founders, that they hear 1,000 no's and they might go and hear half those no's from the same people twice, right? And then that third one is a yes from the same no. So it's so important to keep the opportunity open, keep the doors and those channels of communications open with funds and VCs, and because while you don't meet their investment strategy today, that's not necessarily for tomorrow.
Yeah. And my advice to founders is always to do your homework. Before I talk to a founder, I've looked at their website. Hopefully I have a deck. I've looked at their deck. Maybe I've even talked to one of their other investors if I happen to be connected. The investment world's a pretty small place, actually. It's not a huge industry. And so if you have other VCs on your cap table, there's a high likelihood that we know them or have some connection with them. And so from that perspective, I always tell founders, if you are in the med tech space and you can see on my website that I do not invest in med tech, do not waste your time with me. I might still take your call because I think, what you're building is really interesting, or maybe I think I can help, but be really focused. And if I say no, understand if any investor is saying no, understand why. Understand, is it a no, never, or is it a not right now?
Got it. Well, I'd love to know, you mentioned earlier that you don't take board seats. And so I'm curious if you could give us an example of some of the challenges that you assist with, and maybe a success story that you have for one of your portfolio companies.
Yes. We don't generally take board seats. We have in a few instances. As minority investors, we feel like we're adding a lot of value through that lead generation platform. And so that's kind of our answer. We have 53 portfolio companies in the last 3 years. Wow. We don't have a team big enough, to be frank, to really do justice to taking a board seat in each one of these investments. That being said, I think we have a few companies that we're incredibly proud of. One that comes to mind is Pinata, and I think it will resonate with a lot of people. So Pinata, they're a reward and credit building program for renters. So if you've ever been a renter, I certainly was for a very long time, you can actually get credit toward your credit score for your rental payments, right? Which is something, my husband is Dutch. And when he came to the US, this is something that you don't think about if you're maybe, grew up in the US and haven't had to worry about credit. My husband comes to the US, he has no credit. He couldn't even get a credit card. Couldn't get a loan for the most basic things. And so this is really important for a lot of people. And I think Pinata is doing incredibly well. So if you're not using them and you're renting, go check them out, please. And they work with both renters and landlords. But I think it's an example for me of a company where we've been able to add a lot of value. They're doing incredibly well. Their revenue has grown like wildfire, which is amazing. But it's also a company that's solving a real world problem. And I think a net positive in the world, which is amazing.
I love to hear it. I mean, there's a social impact there for sure, because you know how important, I do at least, and most of our listeners will, how important credit is in America. And I think majority of people nowadays are renters. So solving an issue for them while also getting, the rent paid, which they have to do regardless, is a no-brainer. So I'm glad to hear that you guys have worked on that.
Yes, you also get little treats as well, like little gift cards to Starbucks and other things along the way. So
little perks. Well, lastly, I'd like to dive down into a journey that you may have had along your experience. What's one experience that you might have had that shaped your approach to venture capital, or a real big lesson that you learned from it?
Yeah, I think there's a few. I had the opportunity many years ago to work in East Palo Alto, which is a neighborhood here in the Bay Area, traditionally a very disenfranchised community. And I was working in the education space. I started an ed tech company. I ended up rolling that into a nonprofit, which is a long story. But having the experience of building a company, even just having the experience of having to, pick up that phone and call for the friends and family around, right? Calling people I knew and saying, hey, building this, and we think it's really great, and we think it's going to help a lot of people, and it solves some really interesting problems. Would you get involved? Would you give us some money? Because we need some money. For me, every time I talk to a founder, I feel, I remember what it's like to sit in that chair. I remember what it's like to get started. And I want to be honest, Dialogue to Learn was the name of the company. It didn't get that far. We didn't raise hundreds of millions of dollars. We didn't, nothing like that, but we did build a product. We very actively for about 2 years. And I learned so much about fundraising, about partnerships, about product development. And I think that experience for me, and I ended up immediately after that joining GSV Labs, which was a part of GSV Capital at the time, which is a late stage tech fund. They were making $50 million, writing $50 million plus checks into Lyft, Lime, Coursera, Spotify, like these big brands. And I was working on their labs arm, which is kind of their early stage arm. And it was such a cool opportunity to take everything I had learned and apply it from the other side of things. I really fell in love with that. I ended up running a startup accelerator. So also very much so in that kind of service mindset of how can I help founders? How can I help the community? And I bring that with me here at BDev. And I hope that's something I have instilled in my team here as well, that, hey, you know, the founders are doing the real work. Like they're the real heroes and everyone else is in service of them.
Wow. It sounds like all those skills translated perfectly. Nothing was lost in translation there, to make a bad joke, but that sounds great.
Probably was yes, that's the nice bow on it version of that story. I could certainly tell you all about the nights where you sat up late, like, how am I going to make this work? There were real tears.
It's every other night.
Maybe at times.
Yeah. You definitely understand the founder side. Now you're on the investor side. So you've seen the full picture, and that's why you're making it happen at BDev.
Trying to, yeah.
Well, great. So glad to hear. And Keshia, I want to thank you so much for having this conversation with me today. It's been an absolute pleasure.
Thank you. So much appreciated, and looking forward to continuing the conversation.
Likewise, I'm looking forward to following the success of BDev and all your ventures and all the portcos and all the cool different things you guys are building. And a special thanks to our listeners for tuning into Tech Talk, the entrepreneurs and innovators who turn to EisnerAmper for accounting, tax, and advisory solutions to help propel their business forward. Again, subscribe to EisnerAmper podcast to listen to more Tech Talk episodes, or visit EisnerAmper.com for more tech news that you can use.